Welcome back, everyone. You're watching Finance Flicks Hub, where we break down the biggest opportunities shaping your financial future. Today, we're diving into a massive shift happening behind the scenes of the AI boom, one that most investors are completely missing. While everyone talks about chips and servers, a new bottleneck is rising fast, and the companies solving it could be the next big winners. We're talking about power, who can supply it, who can build the infrastructure, and who's positioned to profit as data centers overwhelm the electric grid. Today, I'm breaking down 5 stocks that sit at the center of this new AI energy crunch. And now, even the major investment banks are telling us this is real. Energy infrastructure is becoming the single largest constraint in the AI build-out. Message. If you're new here, welcome to Finance Flicks Hub, your home for simple explanations, smart analysis, and the stories behind the stocks. Now, let's talk about the next trillion-dollar bottleneck forming in real time. The new bottleneck, power AI, is growing faster than anything we've seen. Servers are multiplying, data centers are expanding, and power demand is exploding. Analysts at Wells Fargo estimate that AI could require 100 more electricity by 2030. To put that into perspective, 1 terawatt-hour powers 700,000 homes. The U.S. grid produces 3,800 terawatt-hours, and data centers are expanding much faster than new power plants or transmission lines can be built. But it's worse. In a recent report, Goldman Sachs analysts say data centers already consume about 6% of U.S. electricity demand, and that could grow to 11% by 2030, pushing spare generation capacity below critical levels. That creates a huge gap between what AI needs, and what the grid can provide. Why this is becoming an energy crisis. A recent survey found that 89% of supply chain managers hit energy-related disruptions last year. Meanwhile, the grid is aging and overloaded. Transmission projects are backed up, with interconnection queues and permitting delays stretching 6 years or more in many regions. Equipment lead times are blowing out. Large transformers now have 2 to 3 year delivery times. A major report by Deloitte says U.S. electricity demand began accelerating in 2025, exceeding many utility forecasts, and peak demand could rise approximately 26% by 2035. This isn't just a trend, it's a structural shift. It's creating what is essentially a new gold rush, not in chips or GPUs, but in the companies that can build, deliver, or generate electricity for the AI economy. The 5 stocks solving the energy crunch. 1. PWR Quanta Services. Quanta is the backbone of America's electrical grid. Why it matters? AI needs new transmission lines, stronger substations, upgraded infrastructure. Quanta is already doing that work. It highlights 83% of revenue from utility and tech infrastructure, record backlog. It's $39 billion. Strong revenue expectations, 18% this year, 13% next year. Likely conservative valuation, approximately 2.3 price to sales, which is reasonable for double-digit growth. CEG, Constellation Energy, largest nuclear power operator in the U.S. Why it matters? Clean, constant, reliable power needed for large data centers. Highlights: strong political backing for nuclear expansion. Management forecasts approximately 13% annual earnings growth through 2030, revenue growth approximately 5% this year, approximately 6.5% next. Valuation approximately 4.3 price-to-sales, higher than peers. Consider waiting for a pullback. 3. FSL, our first solar U.S. headquartered major solar manufacturer. Why it matters? Solar plus manufacturing in the U.S. equals strategic advantage. Highlights: 3.6 gigawatts production last quarter, booking pipeline approximately 18 gigawatts globally. Revenue growth approximately 22-21% this year and next. Forward earnings, $22 share gives approximately 10 pay valuation, approximately 5.4 price-to-sales within historical range. 4. B. Bloom Energy, on-site power generation using fuel cells for data centers. Why it matters. Rapidly deployable solves the timeline delay of infrastructure build-out. Highlights: over 1,200 global sites, 1.5 gigawatts installed, revenue growth approximately 27 to 29% this year and next. Valuation approximately 13.6. Price -2 sales, higher risk, higher reward. 5. EXE, Expand Energy. Merger of Southwestern plus Chesapeake, largest U.S. natural gas producer. Why it matters. Natural gas equals backbone fuel for on-demand power for AI and data centers. Highlights: 7 BCF a day in production, revenue growth approximately 14%, expected earnings $10 share gives approximately 11p valuation, approximately 2.5 price-2 sales, cheapest on the list, valuation plus growth. Rare combo for long-term investors. Final takeaway: the real limit to AI isn't chips, it's electricity, and the companies providing, producing, or installing that power would shape the next phase of AI growth. These 5 stocks cover every category. PWR builds the grid, CEG delivers nuclear power, FSL or expands solar capacity. Key installs rapid on-site power, EXE supplies natural gas for massive data centers. The AI boom will create many winners, but the biggest returns may come from the companies keeping the lights on. Ending. Thanks for watching. I hope this breakdown helps you stay ahead of the trends shaping the market. If you enjoyed this video, make sure you subscribe to Finance Flicks Hub for more clear, simple, and powerful investing insights. See you in the next one.